This is my first time using Melon. So if I screw up or anything, Chris is going to slap me and give me some coaching here. But we're trying something different before I go official and spend whatever. It's not that much money, but I just want to make sure what I choose is the right one.
Yep.
But today, me personally, I'm a big investor in a speculative company called Rocket Lab. And for those of you guys that don't know about Rocket Lab, it's a small launch company coupled with space systems. And the space systems are anywhere between providing solar power, like very razor thin solar panels. You have to think you're launching these things into space. They have to be very lightweight, 33% utilization, a lot of space components themselves, space satellite creations, and then also some software associated with it. At the moment, the company, I'm just going to be blanket statement here. It's like 60% space systems, 40% launch revenue. And so for me, it's a company that I think is getting closer and closer towards that break even point, which is pretty surprising when you think about it from a lot of these other small launch providers, which we'll get into. And it's I'd say a far step behind SpaceX. But if you're going to look at one to kind of present as the one that will probably be the cream of the crop coming forward and being your number two in the long term, I'm anticipating that to be Rocket Lab. And the reason being is one, some of the things I already mentioned about, getting closer and closer to that break even costs. Two, they have kind of one small launch vehicle at the moment that's been launched 39 times. We're hoping for the 40th here pretty soon. They're going to do 15 launches this year. They did 12 or 13 last year. They've been launching rockets since 2018. 39 launches over 5-6 years is a pretty good track record. They've had 2 failures, which I think the 2 failures were in their first 3 launches. They have yet to have a failure since, so that's pretty good. And then I think the thing that will put them even into more of a competition with some of the other providers in the space is they're creating a medium launch vehicle called Neutron. And that is something that is supposed to be reusable from a very similar to the Falcon 9, right? They'll be able to land it and kind of reuse that first stage on a pretty consistent basis. The small launch vehicle, I think, is going to be too small to be able to do that. So what they will do, though, is try to make those small launch vehicles available for refurbishment, which will help cut down on some of the costs. So they're in the testing stage of trying to use some engines that have been launched in the past, so that'll help cut down on costs. And then also utilizing some of the first stages again, because a lot of those are kind of composite material. This is a big 3D printing company as well, which will in the long term, I think, lower materials costs. So all those things at once, I think once you get it all up and running and at its full scale and continue to work on those efficiencies, will continue to do really well. The thing that, and we'll get into some of the numbers here, but the thing that struck out most for me during Q2 earnings was specifically the 31 or 32% adjusted gross margin. And so that pretty surprising considering you're a small launch vehicle company and you're just kind of getting started. And if you look at it from, including share-based compensation and stuff like that, I think it was close to 20 something percent in net margin, or sorry, gross margins. And so that on its own, just putting rockets into space is pretty good. Then obviously you have the operating expenditures, stuff like that. So net margin is still negative, right? They're still burning cash at this point, but not nearly to the extent of some of their competitors. And the thing is, and I'll maybe kick it over to Chris to see if he has any questions before we maybe dive deep into the actual earnings results themselves, is this is going to be a very competitive landscape. And Chris has mentioned it in the past, and I completely understand his view, and I'd love to dive more into it today as well. But it's a very competitive landscape at the moment. There's a lot of people that are kind of on the verge of who's going to come out as that number 2, number 3, number 4. And there's already been some bankruptcies in the space this year, and there will be continued to be bankruptcies in the space. Astra announced either yesterday or 2 days ago, they have about $20 odd million of cash. They went out and got $12.5 million worth of additional debt for equity. So they have about $30 million worth of cash left. Otherwise, they would have ended the quarter about $20 million. So I went out to the market. Somebody was, willing to give a little bit of uh, debt for equity, and so that gives them another quarter. That gives literally until the end of this quarter to really come up with an opportunity for them to continue operations. Relativity is also a 3D printed space launch company. They're in tight water as well with respect to continuing on operations, and there's a few others that are kind of in the same space that will continue to struggle. And there's also some suppliers as well. I know Velo 3D is a lover of a lot of people on the channel. And to me, it's just, I don't, unless their margins change drastically over the coming months, I don't really foresee it lasting too much longer. Rocket Lab, on the other hand, has about $400 million in cash. They ended the quarter at $412 million in cash. And while I did say they are burning, it's not to the extent of being out of capital in the next month, right? They have a couple quarters worth, or probably two years worth of capital left before they really have to get in trouble. And I think with what you'll see in the earnings forecast for Q3, we're getting closer and closer to that EBITDA break even point, to which, with a few more years of continued revenue growth, we'll get to the point where this thing's actually churning out some cash and getting to the place where it's self-sustaining. So, Chris, any thoughts before I kind of dive deeper into the earnings and stuff like that?
Yeah, so I wanted to see who was going to be like a major supplier to all the people racing to get into space. I think whenever you look at adjacent industries, that's one of the areas that I like investing in, where you have this hype train around this one specific industry, and so you have these incumbent players that everyone's just throwing money at, but then there's like secondary and tertiary companies on the fringes that not a lot of people talk about, and so they end up being really good investments. So I was originally tracking, I don't know if you heard of Aerojet Rocketdyne. They got
Mhm.
acquired by L3 Harris, so they were making engines specifically for that sector, and so they got acquired, so it's not really investable anymore. But overall, I think the space race is still very very new. I we don't know who the winners are. The only position that I have right now that's even somewhat space related is Google, because Google has ownership in SpaceX. I don't have any private placement for SpaceX or anything like that, so I'm not in it. But I'm curious to see who's actually going to end up winning out on this. Um, an interesting thing though is that like a lot of countries are scaling back on space investing, because they want to make sure their economy is okay and everything. So I don't see in much of government support for space exploration. So a lot of the private sector is kind of like getting those government dollars. So instead of the government spending money on research themselves, which is primarily, if you go back into the 60s all the way through like the early 2010s, all of that spending was done directly by the government via contractors who would help build the space programs up. Now what we're seeing is now privateers are coming along, like Amazon is doing their thing, SpaceX is doing theirs. So it's interesting to see that dynamic. And it's very similar to a lot of industries like chips, right? Like back in the day, all the semiconductors, they're all made by the government, via government contracts for the Defense Department, and then eventually it transitioned to Intel and IBM and all the other manufacturers. So I think we're going to see the same trend happen for space, where everything started on the government side, via via government spend and also some military and defense applications, but now it's starting to become more prevalent in like the commercial side. So there are a few other adjacent businesses that could really take off. One of them, and someone was mentioning Maxar. I think did Maxar get acquired? Maxar was a really great company. Like they made like spy satellites for the US. So basically, if you were looking at well, yeah, if you were looking at a lot of images in the military, they had like high contrast, high resolution images that were being shot from space, and the principal company that was making it was Maxar. So that was one thing. Another one was, now a lot of people are looking at Black Sky, which is a very
Yeah.
interesting company to look at. Also, I haven't done much research into them lately. I remember seeing them when I was first researching Palantir, because that's like one of their actual SPACs. But unlike the other SPACs, this one's actually, seems like it's pretty legit, and it's got some longer term contracts. So I have to do more digging for sure,
Well, believe
man.
it or not,
But
Black Sky actually just initiated further launches through Rocket Lab today. So they announced that.
interesting.
I think they're going to do um, another amount of partnerships and launches through Rocket Lab. So I think it's going to be a pretty good one
Yeah, their earnings are net tomorrow, actually.
for Black Sky. Yeah, and
For
I think
Yeah.
for the reason why Black Sky is important to me is I first kind of learned about it from a standpoint of Palantir, obviously being an investor in their SPAC. And then shortly thereafter, I learned that they started working with Rocket Lab to be able to bring in their monitoring and things that they wanted to do. And so I think they've already launched two, and there's more within the actual Rocket Lab earnings call, but this was announced today by them that they're going to do an additional several, or I guess here it says block 5 launches uh, in 2024, 2025 timeframe. So
Yeah.
pretty cool to be able to see that they're continuing partnerships. So obviously they're doing something right if that's the case, and doing well in that respect.
Yeah.
So let me share my screen with respect to the stock for those of you guys that aren't necessarily familiar with it. So this is Rocket Lab. The ticker symbol is RKLB. The earnings was well received in terms. I still have to listen to the earnings call itself, but I looked through the presentation, looked through the earnings, and I would say they're continuing the right direction. I'll give you an idea as to what was up, what was down, so what beat expectations, what did not. But at the moment, it is a $3.3 billion company. So to give you scale, I don't think this is going to be as big as a SpaceX tomorrow. But I honestly, with the space systems, with the launch capability, with the ability that they're looking at to have 3 different modes of launch. So you have like the actual small launch that can go into space, and you have like the suborbital launch that they're just starting off as, which I just got some more contracts for today, which is basically making it kind of like what Virgin Orbit was trying to do, which is take a 747 into space and then launch a rocket, except they're launching the rocket from the ground. So they're not actually going into orbit per se, but they're basically going suborbital and launching something from that so it can go into space and kind of orbit the Earth. Then you have the medium launch vehicle that'll kind of happen. And so year to date, it's up pretty good, about 80 odd percent. So I was picking this up. I'm actually at about a break even. This was a SPAC. So for those of you guys that are freaking out, about SPACs, feel free to stay away. But this was someone, Vector 3D, or no, it was Vector AI or something. I forget what the hell the Vector Group, some SPAC named Vector. Vector Acquisition Group, right? VCAG, I think was the ticker. And then it merged into Rocket Lab. And with that, you had about $1 billion worth of capital kind of come into the organization. And I think because all SPACs did, it crashed, right? And I was buying in like the $9-10 range, and then I think my average got down to the $7-8 range per se. And I have about 2,500 shares or so, so it's not a huge position, but not small either. But specifically, the reason why I held on to this one is I honestly saw that this one was in a better financial shape than a lot of them, and so have I not been sharing my screen this whole time?
Are you? No, you haven't.
Oh, really? Jesus. I
Yeah.
thought I was. Sorry. So yeah, just to share and let me know if it stopped sharing. $7 share price year to date. It's up about 81% here.
Nope, you're not
And
sharing. Still not seeing it.
why is it being
Because you got
sharing
to
the
click
screen?
on the thing, like your ad.
I did. Let me try
Hold
this
on.
again. Let me try window instead.
Okay.
Oh, maybe that's why. 'Cause I'm not
Yeah.
doing that. Okay. Sorry, my fault all. Um, sorry, like I said, still getting used to the different streaming technology. So Rocket Lab here, $7 stock. It's up a little bit after hours at 5%. So obviously they liked what was going on. 81, 82% year to date. 3.3 billion market cap here. Um, and if you look at it, it was a SPAC, so it started off trading at like $9-10, and it's kind of increased since it bottomed out in late 2022, and it's kind of been on a run since then.
Who are their primary contractors?
Good question. I don't know if I have the answer to that, to be honest with you.
Mm.
I know that they originally were just kind of looking at doing. I'm going to answer something. It's probably not the answer you're looking for, but
Mhm.
originally they were utilizing a lot of space systems from other folks,
Mhm.
and then they started to 3D print on their own. So a lot of
Mhm.
their components they bring in house. And then it
Yeah.
got to the point where I think that they were doing so much. Part of the money that they used, the $1 billion that they used in 2021, late 2021, they acquired a lot of the space systems that were going to be showing in this particular. So they acquired
Mhm.
Solero, and a few other companies, I think 3 or 4 other companies that now make up their space systems program, which has at
Mhm.
about 160 to $200 million a year run rate,
Yeah.
and is doing pretty good. So they're in the process of those companies were trying to grow very quickly. So they were giving very low margin sort of contracts. Those low margin contracts are rolling off, and now they're starting to backfill them with higher margin contracts. So that's part of
Mhm.
the hopeful growth story when it comes to lowering OpEx and stuff like that in the future. Um, any thoughts that you have before I dive a
No,
little
no,
deeper?
no. Let's take a look. Let's go a little deeper.
All right, cool. So these are the guys. So Peter Beck is the CEO, chief engineer, and then Adam Spice.
Wait,
Yeah,
isn't this the guy that ate like what is it,
ate
a
a hat.
shoe
Ate
and a
his hat.
hat?
Yeah,
He ate his hat.
he
He ate
ate
his
his hat.
hat live.
Yeah. So he said he was never going to make a medium launch or large launch vehicle, and he said, "I'll eat my hat if that happens." And he said that to the board. And next thing you know, the SPAC said, "Here's $1 billion," and he was like, "We're making a medium launch vehicle." So immediately after that, he ate his hat. So the guy of his word, right? Um, and I think he said something else that I forget what it was. He said it in a conference call lately or a podcast or something like that. And
Hey, chat. By
basically,
the way, it's literally his goddamn hat. He literally cut up his
yeah,
hat and ate it.
maybe
You
it's
know.
worth maybe it's worth pulling up.
Yeah. Well, they're what's good. I just saw their I saw the contractors that they work with right there. So funny.
None of the above.
All right.
Let me know if you can hear this.
I let's see. No, I can't hear anything.
Let's share audio
Yeah.
and screen. Understand. Share
It's fine
window.
if we don't if it's fine if you can't.
Yeah,
It's fine.
I guess it's not
Yeah.
really important.
Yeah. Let's just do the earnings and then we could take a look.
Can you hear it now or not?
No.
Basically saying this, doing things that they said they would never do, and now they've done them. And he
Yeah.
grabs the hat, cuts it up, blends it.
Yeah. Let's just go right into their earnings and take a look.
Yep. So
StreamYard is laughing in the back.
that's the guy. I wasn't even showing it on stream. I'm a dumbass.
Hmm.
I'm so bad at this other one.
You're new. It's new. It's a new
That's new.
experience.
You're supposed
Yeah.
to yell at me, man, if I'm not sharing.
Now be patient.
Okay, well that's the old one. So let me share the screen here when it comes to this guy. Let me know if you can see that.
Nothing
Yet.
yet. There we go. Yeah,
I feel like I'm on
I
like
can see it now.
Teams at work. Like, can everybody
Yeah.
see my screen? So the three launches that they had so far, and they're planning another 3 or 4 for Q3, which is going to be exciting because revenue is going to grow to from 60 odd million in Q2, which we'll get it more into the numbers to 70 million for Q3. So exciting that we're going to start seeing a little bit of revenue growth when it comes to
So
that.
I'm going to pause you right here.
Yeah.
One really good thing is NASA. If you're getting NASA contracts, that means that you've been properly vetted. Like your
Yeah.
technology has been vetted thoroughly. Like NASA doesn't just contract anyone to say, okay, you know what, here, we'll give you a shot at it.
Guess who saved SpaceX?
NASA.
Yeah.
NASA. Leidos is actually one of the largest commercial companies, like government contractors on the Beltway in DC. Like if you're doing anything with government related stuff, Leidos is probably one of the companies that you're going to work with. And they're also in the same boat where they are a government contractor, so they have like really stringent security requirements, really stringent like delivery requirements. So this is good. This is a very good sign where you actually have a meaningful revenue coming in from a government source. Because if you don't have that, a lot of these space companies, that's the problem, right? Where you
Yep.
won't have the cash flow to survive. So okay, so I'm interested now. Let's
So
go.
a lot of people in 2021, 2022, they got their SPAC money. They launched a satellite or a small launch vehicle into space, and nobody's done it in 2023 other than Rocket Lab and SpaceX, obviously. But from a small launch perspective, so the folks that we're talking about, you know, the Astras of the world, the relativities of the world, those guys have been silent for the past 7-8 months. So these guys have launched now 7 or 8, I think. They launched 3 or 4 in Q1. They launched 3 in Q2, and they tried to launch 2, but the weather 2 in late July, early August, but the weather's just been hurting them a little bit. So this was a little bit of what I talked about with respect to the suborbital. So they basically just took this Electron rocket that you're seeing here and just angled it. So you can see it's launching at an angle rather than going straight up to go orbital. And this is basically just allowing another opportunity for some of these smaller contractors like Lockheed and others to be able to get whatever they need into space rather than going orbital. They have this. And this was beneficial because this unlocked a lot of what Virgin Orbit was going for. So Virgin Orbit was doing suborbital sort of launches. And so after Virgin Orbit went belly up in 1Q, 2Q, it's like, well, you have a direct access to all those clients. And so it's literally as soon as Virgin Orbit announced that, they said, hey, you know, why don't we change the trajectory a little bit? Now we're suborbital. And so as you know, that sort of ingenuity that made it happen, it seemed like within a month or two. And that's with Leidos that you're kind of talking about there. So they didn't stream this one. And I don't know if it's because of the secrecy of what they're doing with Leidos.
Probably.
This is the only thing that I've seen, this picture. And I was like, really, they were talking about how they're going to launch. And I'm excited because it's a new opportunity. I've watched probably a dozen of the orbital launches, but not the suborbital ones. So
I can kind of tell you why. Pretty much a lot of the technology around hypersonic missile development is still very, very classified. Like it's not something that's openly discussed. Because what it is, you know, it's hypersonic missile technology can get you into space relatively quickly. The problem is you can also be turned into a really dangerous weapon, you know, if in the wrong hands. So one of the unfortunate realities when it comes to developing technologies about sending rockets to space is that it also enables you to basically imagine right now our adversaries got access to technology that Rocket Lab has. And so, and one of our adversaries says, you know what, screw this, I want to attack the United States. Well, they could use this hypersonic technology, and it's really like it's really hard to shoot down a rocket. imagine one that's traveling as fast as these rockets are at the hypersonic level.
Hmm.
It poses a really big national defense issue. So the things that they don't want is they don't want um, like design elements being put out there publicly. They also wouldn't want to have like speed and parameter and missile designs
That makes
out there
sense.
publicly. So it's just one of those things that's like, look, the last thing we want is people copycatting something that works,
Good point.
because
You
that
got Kim
clearly,
Jong Un on the other end of the video, looking at it, writing shit
yeah,
down. Yeah,
yeah.
that makes sense. Um, so talking about Virgin Orbit, how they went bankrupt. So there was about 50 or 60 million dollars worth of stuff that they went on sale, and Rocket Lab took $16 million, bought 3D printers, some vibration tables, clean rooms, this entire warehouse, I think, or part of this warehouse, and they're going to use it to, I guess, upgrade their current facilities and build some electron or neutron rockets here. So they think that that's going to help with operating expenditures going forward. So fingers crossed that that is the
Mhm.
case. For you, Chris, this is their medium launch vehicle. You can see it's got the reusable legs. So this is anticipated, and it'll be fun to watch because remember how fun it was to watch. Like, is the Falcon 9 actually going to land? Is it going to blow up? Like,
Mhm.
so I'm kind of excited. Next year, this is going to be the end of next year. This is going to start flight testing. So I think that
Mm.
they, like they said here, they're testing some of these things already. I think that they tested the Archimedes engine and a few other key components to it, and they have
Mhm.
some of these tanks and stuff underway. Look how big this
Yeah.
guy is comparatively.
Yeah.
So it's a pretty big rocket. I think it's like 6 meters wide. So it ends up having a pretty good amount. But you can see the completion of stage two, the tank, the test stand, and then they're going to actually start building the launch
Now,
pad
here's
three.
own rockets, or do they contract with a subcontractor, make the the rocket motors themselves?
They make the
Because
rocket
that's,
motors themselves, 3D printed.
oh, interesting. That's good.
Yep. Yep.
Yeah. That's like the most complicated part of the entire industrial design process, where any idiot can make a rocket. You just take components and you put them together, and boom, there you go.
Mhm.
You got yourself a rocket. The hard part is designing engines that are able to withstand the pressures of space and also space travel. And
Yep.
so it's good that they're doing the internal development themselves. And that's like one of the big things with SpaceX that I really like, is that SpaceX
Yep.
develops their own technology in house.
Yep.
Interesting.
So if anybody knows, I'm like 85% certain that they create their own engines and they 3D print all of them in house. I think the majority, I'm going to get this number wrong, but it's in the same magnitude. It's not 100% 3D printed, but I would say somewhere between like 70 to 90% of these rockets are 3D printed.
Hmm.
Relativity, I think, gets like the one up because I think that they actually put a rocket into space that was 100% 3D printed. But these guys
Hmm.
were, I think, some of the first to put 3D printed components into a rocket and put it into space. I forget, that was a couple of years ago, um,
Yeah.
but yeah. But this is the big piece, right? Because this is about $200 million worth of capital and research and
Hmm.
development that they're going to have to put remaining into this. So of that 400 million, kind of 200 million is kind of allotted for the finishing of this. So you have all these different milestones associated with the medium launch vehicle, and so within about 18 months or so, we should start seeing a lot more with the testing coming up for this
Yeah. See,
medium
unfortunately,
sized
this is
rocket.
this is one of the things I'm not a fan when it comes to investing in space tech. I
Yeah.
feel like we're so early in the mix that literally it's going to be I would say at least 5 years before like major revenues start to show up in their bottom line. Like SpaceX, it took them at least what, 15 years since they started to
Yeah.
get to a point where they
I
were
think these
break
guys
even.
are
And yeah.
2006 and they have yet to break even.
Yeah.
So
Wait, this was started in 2006?
I'm pretty
Wow.
sure.
Yeah.
Yeah, let me see.
Interesting.
Uh, I'll pull it up later, but I'm pretty certain it was like 2006. Let me see. Is it on Robinhood? Yeah,
Mm,
2006.
wow. So it's been a
Yeah.
while. Yeah.
Where am I at? So this is pretty cool. So they're working with Varda. So they created this capsule basically. Varda is like a pharmaceutical company that's trying to make kind of like zero G sort of pharmaceuticals. So SpaceX actually collaborated with them, or sorry, not SpaceX, Rocket Lab collaborated with them to create this capsule that allows them to kind of work with some of their pharmaceuticals in space that require zero G, which is pretty cool. So we'll see if this is working, but I think they have another 3 or 4 launches with these guys. I think it was a total of 4, but yeah, first of 4 developed for Varda, and they're already in production for the next 2. So that's going to be pretty cool because that can be consistent. I mean, if these things work and it ends up having good results, that's another stream of income as well. Is not only the actual capsule itself, the satellite itself, but also the launch and how to get there, right? So
Yeah.
um, you can see that they're the ones that are making the majority of these components, and you know that's where the other part of not just the launch company, which is like SpaceX, but also the
Hmm.
people that are creating the satellites and the end. It's almost like a end to end. And I didn't explain this well for you, Chris, but one of
Hmm.
the reasons why I got into Rocket Lab in the first place was because they wanted to basically be the premier small launch company. And so I was like, okay,
Hmm.
that's a pretty novel goal. Like, not everyone needs to have a huge Falcon 9 rocket going into space, and not everyone can afford that, right? It's probably 40-50 million dollars to
Yeah.
afford a trip on that or rent the whole thing. Versus this might be anywhere between 6 to 9 million for a small launch. And then once they got all the capital, they changed from just small launch to, hey, every single launch that goes into space, whether it's a satellite, whether it's like a small solar cell or what have you, we want a Rocket Lab logo on it. So I
Hmm.
think that they opened up, like of the, I'll have to pull it up on the sheet. They've had like however many successful launches this year, 7 or 8, but like 36 launches with respect to having something with Rocket Lab on it. So whether it was a satellite, whether it was a solar cell, or some sort of component. So continuing to expand, and not just the launch space, but also the space system space, which is really cool.
One thing that's interesting, I'm going to take just a side quest real quick just to explain
Yeah.
something. This is actually one of the things that a lot of people in India are banking on as an industry that could really grow for them. The reason why is because India has had a lot of great rocket scientists, like since the 70s. They've actually gone on to design a lot of the rockets that's used around the world. But the thing is, all that development was done outside of India. So the net benefits have traditionally been captured outside of India. And there's like a new generation of Indian people that have been more inclined to invest in India and the Indian space technologies around it. And what's kind of interesting is that they're doing it at a price point that's actually very competitive to the West. And so the main company in India that specifically deals with this called ISRO, which is an Indian space research organization. They were actually the ones they were able to send a rocket to Mars and set up a satellite
Hmm.
for like $50 million or $90 million, something astronomically cheap, which cost like NASA billions of dollars, right? So it's very interesting to see that there are competitors out there that like now you're starting to see this move in this direction, right? And it's really interesting because I think what it is as time goes on, this technology of getting into space is going to become cheaper and cheaper and cheaper until maybe one day me and you will be like, hey man, let's go take a weekend trip to Mars, or not a trip Mars, probably the moon. And it'll be interesting to see. But it's actually really cool to see like where India has come from. And they actually have they have a thriving space launch business that's actually competitive with a lot of the West. So it's just interesting. And it's kind of funny because India technically was a very poor country. And there was a lot of people that did not want to invest in research and development on space, saying, you're all of the third world country, you're a bunch of poor people. Why would you want to go into space? And it was really bad. But some of the scientists in India are just, dude, they're super brilliant. And a lot of them have actually they used to all be recruited by like MIT and NASA, and like lately a lot of them are deciding to just stay. They're like, no, I want to stay in India. I want to focus on my own national development. And it's a really cool thing because like you hear about these stories like around, and it's kind of cool. It's kind of cool to see. That's all.
Yeah.
Yeah.
No, it is growing at a great pace. And I know a lot of
Yeah.
companies, including UDOC, are starting to offshore to India for all the great education systems that have been built there. I mean, you have to think a lot of those folks come to the US, Canada to be able to continue their careers after they
Yeah.
get their masters or PhDs. So um, a lot of
Yeah.
folks will continue to excel when it comes to
Yeah.
working in India and working on these things. And I know that they have a pretty big local space program as well. And I've watched a few of their
Hmm.
launches.
Yeah.
Um, let's see. Yeah, they've had 36 successful launches by the end of Q2, on track for 15 launches in Q3, 5x the successful missions of all small um, entrants combined. So that's Astra Relativity. So keep that in mind. There's been like 6 or 7 launches amongst all those, and Rocket Lab's done 36 comparatively. So this is kind of the recovery piece of them trying to lower operating expenditures and basically reuse some of these components and be able to put them back into space. So they're targeting the recovered engine that they had for the fourth quarter, and then hopefully the first full stage. So these kind of things plus the engine themselves in 2024. So that'll be cool. Here's Black Sky, 5 additional launches that they announced today, and a few others like the haste launches. So should be pretty interesting considering we're continuing to look at it in terms of continued growth. So 13% quarter on quarter, which isn't too great when you think about it in that perspective. But what I was noticing was this massive increase in non-GAAP gross margin and just overall gross margin. So it went from like 11.6 last year to 23.5%. And they're forecasting another 20 odd percent for Q3, which I think is going to be a huge component of how does this actually relate back to the bottom line and how do you get net profitability. And then also just looking specifically at, with the revenue growth, are they keeping their operating expenditures in hand? So what I will say is their operating expenditures were below expectations. Their gross margin and revenue met, gross margins exceeded handsomely comparatively to what they thought. And then the free cash, I think, with the exception of the capital expenditure for buying or the capital for acquiring a lot of that Virgin Orbit material, I think that the actual free cash only being negative 16 million, 17 million was way better than what we had seen in the first quarter. So, and I think that they're only thinking about 10 to 14 million in 3Q. I think a lot of that has to do with all the additional launch revenue that they're going to be receiving. So keep in mind the revenue was 60 million this quarter. It's supposed to be 70 next quarter, and a lot of that has to do with the additional launch they plan to have in 3Q. So 30 million as opposed to like 20 to 24 million. So that's where that additional 10 million or so kind of comes in. Continuing to forecast that 21 gross margin on a GAAP basis, 30% on a non-GAAP. So only a loss of about 10 to 14 million. So we're slowly inching our way closer and closer to net profitability, which to me, I wasn't really expecting until 2024. So to be able to get that maybe in late 23 or early 24 will be a nice surprise for its entirety. But I know it's a little bit minor to kind of give you a glimpse of it, Chris. And I know that you need to do more due diligence. I can't show it to you in a matter of 30 minutes and you'd be like, oh, I'm completely sold. But
Yeah.
this was the opportunity that I was kind of explaining to you. And I completely understand your point, which is, hey, there's still a lot of capital to burn between
Yeah.
now and the next 12 to 24 months. What players are going to be around? Are they going to consolidate? But But anyway, just I'll turn it back to you.
Yeah, no, you know what it is? This is definitely probably one of the most speculative industries, not even a company, but industries that quite possibly one day will revolutionize the world. So there's no doubt in my mind that they're going to be winners, but it's so early to pick up on this. This is like investing in investing in a car, like an electric car in
Right.
2003,
Right.
right? Where the total return is now you could 100x. It's a possibility on a company like this. I mean, if you think about it from a total addressable market, the total addressable market for most things is like really small. If you can successfully engineer a space company, your total addressable market's the universe. It's just a matter of the time frame, right? So I would say I am not necessarily interested in owning any companies related to space right now. Maybe I was interested in a couple of engine manufacturers for space because people are always going to need engines, but there's really not that many to put in. So I think a lot of my capital right now I'm allocated towards more value based plays. So there's a lot less money that I have to like speculate with, but that doesn't mean that other people can't speculate in it if they don't want to. But this is definitely not a company or a sector that
Yeah.
you want to put your life savings into and be like, okay, I'm going to be patient and wait until something happens. I'd rather be slow and methodical with it.
Yeah.
And so yes, it's good to speculate, but keep it a very, very minor position until you get way more success in line.
That's the
That's the
thing.
way
I
that
mean,
I would
I
do
think
it.
you
Yeah.
articulated it perfectly, and you're not wavering from what you said a few months ago. It's like
Yeah.
you could wait until this is a $6 billion company and they've eliminated some of these risks
Mhm.
that could eventually literally have them going bottoms up. I mean, think about how many wasted launches they might have for Neutron before they actually get to the point where it's actually churning out money. They've never landed the vehicle. They've never launched the vehicle. They've never done
Mhm.
any of these things. So, how much capital is it going to be able to get that to a point where it's actually churning out revenue? Not to mention the additional 100, $200 million you have to spend to even get to the launch pad. So, I
Mhm.
understand exactly what you're saying. In 12 months or so, it's like, well, this company might be a $6 billion company by then, but we'll know a lot more, right? And we'll also
Yeah.
know how's Astra doing. Has all their backlog been moved to Rocket Lab? How's Relativity? Has all their
Yeah.
backlog moved to Rocket Lab? All these other sort of space system companies, are they still around? Is Black Sky still around? Are all these other companies
Mhm.
still around? Where you consider all the backlog still either going to Rocket Lab or elsewhere, because Rocket Lab maybe is floundering, in 12
Yeah.
months. It could be possible. So I 100% understand where you're coming from. It's like, if you truly think that this is the premier, second, or third launch company that could be out there, could be a 50 to $100 billion company, what's the harm in waiting and eliminating
Mhm.
your risk by probably 80%, 70%, in waiting for 12 months? You might lose out on an additional doubling of your money, but you
Yeah.
can guarantee going from 6 to 50 or 6 to 100 billion, and eliminate 80% of your risks. Like that is a fair thing to say. Right
Yeah.
now, it's very, very speculative.
Yeah. I think that's the other thing too. A lot of these space companies, you know, are they gonna run out of cash before they make it? That was the thing with SpaceX too. Like there was an episode, I forgot what channel it was, but they did this documentary on Elon Musk, and he said, at one point I had to choose either keep Tesla alive or keep SpaceX alive, and I don't know how I pulled off both. So he almost ran out of money before the rocket did what it was
Yeah.
supposed to do.
All this
And
PayPal
that's
money.
yeah, man. It is
I think
kind of
he walked away with
crazy.
what,
It's kind of crazy.
180 million or something like that for PayPal, and he
Yeah,
used it
yeah.
used it all in starting SpaceX um
Hmm.
and pay and sorry,
That
putting
guy's
money into
got
Tesla.
Musk has got balls, man. To go
He does.
freaking like most people, if I got $160 million, I'm done. Like I'm good. Like I don't need to
I
go
would
to
do
space.
something. I don't know if I'd walk away. Like, I feel like
Yeah.
if you have enough balls to create something that is worth 160 million, even if you partner with a bunch of people, and I
Hmm.
feel like you have to have some sort of cojones, and you're not doing it for the money anymore at that point. You're doing it for
Hmm.
just the so
Yeah, but this dude went all in
he did.
on another thing. Like he didn't even have money on the side. He was
He's
borrowing
different.
money
He's
to
different.
eat.
Yeah.
That's crazy. That's the level of entrepreneurship and dedication that Musk had, man. So
I don't have it,
yeah,
man. If it
yeah,
was if I was in his shoes with PayPal, I'm with you. I wouldn't have done I wouldn't have done the rockets. I wouldn't have done, Tesla, but it is what it is. But uh,
yeah.
I am kind of interested. I need to start reading some of these comments. But another thing is, Chris, I don't know if
Someone gave you a super
a
chat.
super chat. Oh well, thank you. Let's see.
Infamous
I think I did see that. I was too much in the zone.
información right
Yeah, there
there.
you go. Infamous. Oh, that's infamous. Yeah, thank you, my guy. $5 Canadian. That's
Yep.
like $100 US these days. Um,
No.
but I know a lot of people. I know I'm just messing, but much appreciated still. A lot of people talk about Velo 3D, so I'm curious. That one's going to be one I'm watching as well. People always talk, but they have capital. They have capital. It's like no, they have authorization to sell shares for capital, which means dilution. And people keep talking about how they have $300 million of cash on hand. It's like you have to recognize this is the problem, and this isn't just about Velo 3D. So I'm not attacking you guys, but I've had multiple people at this point tell me that they have $300 million worth of cash in hand. There's a difference between having the authority to sell $300 million worth of shares and a company that's worth less than $1 billion to acquire $300 million versus having $300 million worth of cash on hand. And so I think what some of you guys need to realize is this is just about in general and investing in the stock market in general. Sometimes you get a little bit of knowledge and experience and you think that you're smarter than you are. And sometimes the knowledge that you get and the experience that you get gets you into situations that you don't fully understand because you don't necessarily know enough. And I've been that way. I've gotten myself into writing naked calls that have lost me tens of thousands of dollars because I knew enough to get myself into what I thought was an easy trade, but not smart enough to realize that I needed to hedge it and take a little bit less, but eliminates a lot of the risk. So just be cautious with some of these things, thinking that you might have the ability to basically have $300 million on hand versus having to go sell shares is a very different story.
There's one other thing that I just want to highlight, and this is something that I made a mistake in the past. Do not conflate the product to the business. There's so many people, they say, oh my God, this product is amazing. That means that the business must be amazing. And sometimes that's not necessarily the case. I'll give you an example. Would you want to buy Peter Luger's or would you want to buy McDonald's in the 1980s? Peter Luger's makes amazing steak, right? But in terms of investing in Peter Luger, you can't really do it. Why? Because they make really good steak at that one restaurant in Williamsburg, which everyone loves, but then trying to make that same great product, that great steak, and scale it is really, really difficult. Whereas McDonald's is a cheap burger, but it's very scalable and it's very easy to just put it everywhere. And so you can make a shit ton of money. So one of the things that I think I've seen people is that people have seen the product and they think, oh my God, this product is so good. The thing is, can you build a business around it? And I think that's the key that you have to remember. So whether it's Velo 3D, whether it's any of the other 3D printing businesses, because I've been looking at 3D printing businesses for the last 5 years, the problem has never been that the product is a problem. The question is, can they build a business around it? And unfortunately, they haven't proven that yet. So even though they have customers that are, that are very famous, have great counterparties, the question is, can they do what they're doing profitably? Whether that means that the products that they have a business model that allows for them to make money where every time something is printed, they get some sort of revenue for it or stuff like that. I don't know. These are the kinds of questions that when you're investing, you have to ask yourself. Don't just look at the product and think that, okay, this is the great thing. You have to also look at it from the business aspect and say, does it make sense as a business? So I think a lot of times we all get caught up in, wow, I think this is a great product. Even with this company, right? Rocket Lab, like, wow, who doesn't think space travel is important? Yeah, it is important, but can you build a business around it that's successful, that's repeatable, that's going to be able to generate you money in the future? Or is it just your, someone's side hobby of sending rockets to space? And are they going to make it? So these are the kinds of questions that anytime anything comes along, you have to really like look at, like, and every single industry goes through this, like a phase where, oh my God, I love AI. And then someone says, look, I have this AI product. And you're like, wow, that's really cool. Can you build a business around it? Because if you can't, the product being great is not going to help you with that. You have to figure out how to monetize and how to build a product so that in the future, it's something that's going to deliver shareholder value. Other than that, you just have a really cool product. I mean, I'm sure that there's tons of examples that you can give, Matt, of really fucking cool things. But when you look at it from the business standpoint, it's like, God damn it, man. How come they're not making any money?
In 2013, I bought 3D Systems, ticker symbol DDD. And
Mhm.
look where that's at now. It's trading, I think, less than, I mean, I think I bought it at a good price. I think it was like 12 or 13 bucks. It went up to 100 or something like that. And the numbers are going to be wrong, but I thought I was king shit, right? I had like 100
Yeah.
bucks in it and it went to like 300 or 400 bucks or 700 bucks. And, it's kind of early days of Matt Money trying his best at picking stocks. And
Yeah.
um,
I
I
mean,
sold a good bit
I-
of
I'm
it.
glad. I'm glad someone brought up Crocs. Right, Crocs right now is a $6.4 billion company. All it is just rubber shoes. Okay, what's so really sophisticated about the product? Not really much. But what it is it's very easily made. People really like it. It's convenient, and they're able to monetize
The
it at a
margins are
rate that
good.
their margins are freaking amazing. Right. So you have one side. You've got a company that's trying to send freaking people and stuff to space versus a company that makes shoes and slippers with like a little cartoon crocodile on it. And yet the value of the Crocs is more than trying to send shit to space. Cool wise, send shit to space. Make money wise, rubber slippers. you know, it's such a weird dichotomy of how things can be. Like the most mundane things can be super freaking amazing and like profitable, and the thing that's actually important, that's relevant, that's cool, doesn't make any money.
Yeah.
It's interesting.
The problem that I have with Velo 3D is every single investor that I've talked to says this, and they regurgitate the same thing. So I don't know if it's the same person with different names that will like consistently DM me, but Valentina says a lot of the same things that some guy that was DMing me for a while. I was like, look, man, I'll look at it. I looked into it, and it's not that I don't like exactly what you're saying. It's not that I dislike the product, right? And what they're using, I think, in the customers that they have are high known. SpaceX is known for using Velo 3D and stuff like that. It's the cash burn, and do I actually think they're going to be able to get to a place where the company is not going to be basically sold up for bits and pieces? And yes, I understand the product is great. A lot of people rave about how great it is, but at the end of the day, the stock is worthless unless it can eventually turn a profit or have somebody keep funneling money into it to keep it alive. So,
Yeah.
and in this environment, I don't think a lot of VCs are running to be able to invest into a company that has yet to. Now, exactly what Chris said. The company says that late 3Q, early 4Q, they will be cash flow positive. If that's the case, I might miss out on a 100% return or 200% return. But if the company is as great as you say it is, it's going to be a 10, $20 billion company. I could eliminate a lot of that risk and get into it once it starts to really hit that pivot point and eliminate a lot of my risk. Right now, people are like, oh, well, it's got like 50, $60 billion worth of cash. Yeah, well, they're burning 35 to 40 billion a quarter. So they have 2 quarters left. So if they don't make profitability by 4Q, they will have no money, and then they'll either have to sell shares or go to the market. And who wants to give money at 10% or 12% right now?
You know who's very interesting? Someone brought it up in the chat. Sphere, SPHR. Do you know the company Sphere? Like, do you see
I've
the
heard
Los
it
Angeles?
recently.
Do you know the Los
Oh,
Angeles, like
oh, oh,
that?
yeah, 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 yeah,
Not
yeah,
not
yeah,
Los
yeah,
the Las Vegas, that
yeah,
circle thing.
yeah.
So the parent company of Sphere is actually what do you call it? Madison Square Garden, right? And so it's a very interesting concept, very unique. I'm wondering what kind of monetization they can get for it, but I bet you it's fucking cool, man. So I would say the product is really cool, but now it's time to like dig deep into their financials. It's like, hey, you know what? What does it actually cost to make this thing? And like, can they make it in other places? So I'll definitely check it out, you know. So someone asked me, Chris, why don't you invest in medical devices? Never hear you talk about it. And I thought you were in the medical field. I am in the medical field. Um, there are times where I'm thinking about investing in a few companies. One of them was like Dexcom. Every time I look at Dexcom, it just feels expensive. But that was probably one of my biggest misses in life. Dexcom does diabetes monitoring, like on the person. And what you do is you just literally have a patch, you scan it, and basically, you can use it to inject your insulin as necessary. Another one is Stryker. Stryker is there. Hologic makes machines for stereo guided biopsies, which is like the industry standard. So I have my eye on these things. It's just the valuations on these things are crazy, man. So sometimes I'm just like, eh, Intuitive Surgical is another one that I kind of missed. Like they're the ones that own all the Da Vinci operating, the surgery robots, you know. But I don't know. I should have been more I should have been more into this field. But it always ends up being that every time I look at it, I'm like, man, this is too expensive. I mean, most of them have never traded anywhere near a PE that's reasonable. So yeah.
What was it to say? I am curious about that. I haven't heard you talk about it. The EV charging space. I'm biased because I work in oil and gas. I work for UDoc. You know exactly who I work for, but I don't. I'm not comfortable saying it publicly. People are really searching; they can find it. It's not too difficult. I just don't want to be associated, directly saying like Matt's touting that he worked for this company. Yeah. I'm a firm believer that the real estate piece is what really matters. The convenience store piece is what really matters when it comes to a lot of these EV charging sort of stations. And all that real estate is already kind of owned nationwide, right? And with that, I think you'll slowly start to see these gas stations that have been primarily focused, these 8 to 10 gas stations primarily focused on giving out petrol to people, to now having charging stations. We'll probably start with 1, 2, 3. You see them at Wawa in the Northeast. You see them at Sheetz in the Northeast. You're starting to see them at Buc-ee's here in Texas. So it's like, I don't really think, I think if anything, I don't really know who Tesla uses for their superchargers. I know who UDoc uses for their superchargers. I'm not sure who some of the other majors use for their superchargers, but I'm curious about your thoughts on how to profit from some of this stuff.
Okay, so to be 100%. No, can you hear me? Hello? Can you hear me? Your headphones might be dead.
That's what it was. My headphones turned
off. To be fair, I don't think charging like is going to be a profitable business, with the exception of some really good niche players, right? So as an example, like someone like Tesla who owns their own network, I think for them it'll be profitable because they just have the entire system mapped out. They know what it is. They have the scale now, right? And now they also have the charging standard, right, built into them via their partnerships with some of the other major companies that manufacture it. The reason why I say that is because if you think about a gas station, everyone has to use a gas station, right? Everyone, whether you have a car at home, whether you have it at work, you're going to eventually visit a gas station. When it comes down to it, the only ones that are going to be profitable, in my opinion, in terms of foot traffic, are going to be charging stations that are in a very, very remote location between 2 points of two points of distance that are very like highly likely where people are going to have to stop. So as an example, if you look at a corridor of like Los Angeles and Las Vegas, at some point you're going to need to stop your car and charge it. There's
Mhm.
no way around it. And what's in between those two destinations? It's nothing but a fucking desert, right? So you got
Dude, are
nothing
we
but
gonna go
land.
start buying some land? What are we doing?
That's where you want to be. You want to be in a large part in the middle of nowhere, but in between two different charging points. I think those are the only places where um, they have to be.
How
They would
far is
that
like
would make sense.
Tahoe from LA?
I don't know. I don't know these things. I'm not in
I'm gonna start
California,
doing
so
this shit. I'm gonna like look at cities and I'm like, how far is this place, this destination
yeah.
from?
Now,
What's
what
it
I've
gonna be?
seen, what I've seen that some people are doing to monetize, and this is actually a very interesting thing, and I've seen this in Europe. Basically, what they'll do is they'll have a charging station where you go and you charge your car, and then there's like a pod that you go, and the pod has like amenities in it, like a place to sit, or watch TV. Some of them even have place where you can play video games and stuff, right? And what it is you just sign up for a membership, and so you would go charge your car, and then you would go to it and you would like scan it, or you scan a QR code from your phone or whatever, and it would open the door. You could go in there, and they have like vending machines, and they have like food, dispenser that you can grab food, microwave it yourself. So there's no attendant whatsoever. All it is just a place to sit and convenient. And I'm pretty sure that's a business model that can work. I'm pretty sure there's a business model that can work because there's no cost in terms of employees other than just refilling and cleaning, right? But you're still going to need a place to just congregate for a little bit until the charging is done. But even those, I wonder if fast charging will eliminate those. I, I I don't know what the business model that would be successful could end up being with that. But I would say one thing. I would love to see a Bucky's in the middle of nowhere with like 200 charging stations where people could just park their car, charge, and they go inside and there's fucking food everywhere. That'd be
Dude, Bucky's is a
I'm telling you,
fucking
that's what dude, Bucky's is awesome. Bucky's
next
makes
level.
so much money.
Have you've had
So much money.
Wawa and Sheets? I'm assuming because you're kind of in
Yeah,
the
yeah,
Northeast. Yeah.
yeah,
What do you out
yeah.
of? Do you think that Wawa and Sheets are better than Bucky's or absolutely not? They're different.
Wawa's nice. Wawa's nice. I like Wawa. I'll let you in on a secret. Gas stations, they make very little money on fuel, like very little money. Most of the money that they make are in two parts. When you go to inside and you do your fringe purchases, and a lot of gas stations now, if you've noticed, they're attached to like a food like thing, right? So they'll have like a Subway next to it, or like or my brother's gas station has something called Chester's Chicken. I don't know if you've had Chester's before, right? So they have
I've
like a
seen it, but I've
chicken
never had
thing.
it.
Yeah, it's like really nice. It's a chicken with a cowboy hat. You got to see the logo, the mascot. The mascot's awesome. Um, but basically, that's where the majority of the money is, and I think that's going to happen when it comes to EV charging as well. The only problem is if people can charge their cars at home, their daily use is you're rarely going to go to a gas station around you. Right now, you're kind of forced to. You're kind of forced to do it. You don't have to necessarily go inside, but it's one of those things. Like if you're thirsty, you just go inside, and it's convenience, right? I don't know. I don't know. I think
And I
we're in
think
for
it's
some
going to be
dramatic
short
changes.
lived, right? Because if you think about it, in 10 years' time, if you really need to get, like, let's just say perfect world, right? 10 years from now,
Mhm.
everybody has autonomous vehicles. And, of course, there's going to be a transition period. But if that's the case, then you would literally be able to send your car in the middle of the day to go get charged if you really needed it. You get to your destination and you say, okay, go to wherever you need to go get charged. I'm going inside to do whatever I need to do. The car will go to some sort of shop to get charged.
Mhm.
However that happens. And then, you have the ability to have the car come pick you up when you want it to, go home, like you said, either charge at home again, or if it's doing robo taxi stuff, right, just go set it out for 6 8 hours,
Mhm.
and have it when it needs to get charged, go charge itself. Like I'm anticipating that it will soon be a case where nobody really, like very few people will actually have to go and charge themselves, because the chargers will either connect themselves automatically, or
Mhm.
the
Or
robo
they might have
taxi piece
some,
will take
or they'll have like wireless charging, right? Where they have a plate underneath that's
yeah.
actually like charging. So basically what happens is when the car comes up and pulls up, like it scans like the car and then literally just raises the charger up. and then it charges the car, connects to it, and then can come down
Yeah.
when it's done, and now the car's fully charged and it's autonomous. I don't know, man. The fucking world is gonna be amazing to see what
No,
happens in
I
the
mean
next
it's
10
I
years.
and SG
Yeah.
is my buddy from work, and I don't know if I've talked to him about this or not, but him and I have
Mhm.
the same thought here. Is you already see this in India where you have electric scooters, they'll go up, they'll
Oh
change
yeah.
out the battery there and
Yeah.
grab the battery from the locker box, put it in, and drive off.
Hmm.
There's no
Yeah.
charging aspect to it. It's in the locker box. And so
Yeah.
will you get to the point where solid state batteries or battery technology is so small that you can have so much, just like how batteries continue to get smaller and smaller and semiconductors continue to get smaller and smaller? Is it going to be like the battery version of Ohm's law, where every year a battery is able to shrink by 50%, or every two
Hmm.
years is able to shrink by 50%? And you either
Yeah.
get twice as much mileage or the same amount of mileage. There's going to be some sort of law, some sort of equation that comes out that's similar to Ohm's law, if there's not already one. And
Yeah.
anyway, but yes, Valentina is a paid bot from Velo 3D.
You know what I'm surprised at? That the biggest component cost to a car right now for EV is the battery, right? I'm
Yeah.
surprised no one said, you know what, I'm gonna make a car specifically for commuters. So it's only gonna have 100 miles of range, but it's only for commuters. I don't know anyone that uses more than 100 miles to get to work and back every day. I
Hmm.
think that's enough.
I
So
drive far as hell, and I maybe am at like 55 to 60
yeah, so
round trip.
it might be something to consider, because at that point you can really lower down the price point significantly, because most people are going to have 2 3 cars. So me, like, we're looking to buy a car next year. But I
Why'd
don't
you
want to
roll
pay
your
my
eyes on that one, Chris?
uh-huh.
You rolled your eyes when you said we're going to buy a car next year? Are you not looking
Well,
forward to it?
no, the thing is, my wife wants to get like a Volvo,
Oh
EV.
yeah, you were telling me
And
about this. Yeah.
I was like, no, we should get a Tesla. The Tesla's like got a network. It's already got reliable, X, Y, and Z. So like every time I talk about it, my wife's like, no, let's get a Volvo. I'm like, God damn it, woman. Like, we'll see what happens, because she's the one that's primarily going to be using it. So,
Yeah.
yeah. See, the problem with the Nissan Leaf, it's ugly. Like, you cannot make a car and make it ugly. No, like, it's a car is an extension of yourself. If there's one thing that Elon got right when it came to EVs, he made EVs sexy. You remember the EV cars before Elon, like the Prius, ugly car.
Yeah.
You know, like, all the other cars are so ugly. Why are y'all making some ugly ass EVs? Why not make some freaking good looking cars, man? There's a car that looks pretty badass. The new Prius looks amazing, by the way. Did you
Does
see
it?
the new
I
Prius?
haven't seen it. No.
Oh, dude, let me show you. The new Toyota Prius looks freaking awesome. Like, people are actually finally learning that, hey, you kind of need to design a car, even if it's an EV, that's a lot. Let me just show you real quick. Share.
Isn't
All right,
isn't the
can you see that?
Lucid expensive as
Yeah.
hell?
This is what the rendering looks like for a Toyota Prius now. Look at that.
That's not
Much
bad.
better looking car. Yeah, much better looking car than what there was previously.
Is it still hybrid, or is it going to be fully electric? Or
I think they have two versions. I'm not. This one's a
okay.
hybrid, and maybe they have another version that's all electric. But they have a plug-in hybrid. I think a plug-in hybrid works. I think it would be awesome. But look at that car. Compare it to like the Toyota Prius from like the year 2000. Look at this ugly ass fucking piece. Look at it.
I remember when it first came out in 2003 or whatever it was. It was not
Yeah,
good.
bro. If you if you went on a date and you came up in a Prius, the girl just went back in. She's just like, nah, dude, this is not gonna work.
Unless you were in LA. I feel like it was an LA thing back in the day.
Yeah.
Before I ask you this question, and then I think we should call it, because I don't want to
Yeah.
hold you for too long for Boss Lady. I don't hate Velo 3D. The thing that bothers me is their cash burn and the fact that they have less than $100 million worth of cash on hand. If they were in the same financial situation from a cash on hand perspective as Rocket Lab, I'd be much more willing to risk the opportunity. I don't see them getting to a place where they're not going to need some sort of intervention of issuing more debt or selling a lot of stock. And at that point, I'd rather wait for that event to happen before investing in it. Rocket Lab's different because I see them having the runway to get to. They're only burning next quarter. They're only going to be burning 15 to $10 million worth of cash, and they have $400 million on hand. Velo 3D is not in the same situation. They're burning 30 million. They're going to report here, I guess, at the end of the month, and they're going to be dwindling down to probably $30 million worth of cash, which is probably a quarter or maybe 2 quarters if their run rate gets a lot better. So I would much rather wait until things turn around before I invest. And then Chris, curious about your thoughts on
Upcellera.
Upcellera. I
Upcellera.
looked at it the other
Ups-
day.
Upcellera is like a super long hold. Like you're gonna have to wait a lot of time to get a meaningful return, but the technology is proven. The business is proven. They have plenty of cash on hand. They're not going anywhere. They have partnerships with so many counterparties that are like up there.
That
So
was going to be
it's
my question for
yeah.
you, Chris, if I could just interject, because
Mhm.
I was wondering, is the value in I think they have like 40 partners or something stupid, right?
Mhm.
Is the value in the fact that they have so many other partners that believe in what they are doing, or the fact that they have, I think it was like 10 or 11 drugs, 2 of which just passed phase 1 or something like that,
No,
and will kind of
it's the
continue?
technology. It's the technology that's their biggest moat. So they can do they're technically their business model is of something called a CRO. So they're contract research organization, but they're a little bit different in that they don't just like do the research for you. They actually take a royalty from your success, right? And they also take what is that thing called? Like milestones for your success. So one of the things that I was very curious about was, when you do drug discovery, when you invest in pharmaceutical companies, it's like investing in Britney Spears, right? She may make it, she may not, right? But you can't be invested in just one star. So if you think about it, you want to have like Universal Music Group where you're invested in all these stars, but you get like a little piece of a little cut of everybody. So what these guys do, they work with these guys to do the initial research, find the molecule that they're looking for or the drug that they're looking for to develop further, and then hand it back to the main company. So what happens is the drug company says, "Look, I am trying to solve for X, right? Help me here. I'm looking for this specific target." What these guys do is they do the research and say, look, this is the molecule that's more than likely to work, right? Based on the parameters that you have provided me, looks like what's going to actually work. For that information and for that knowledge, they charge you a small amount of money when you actually go live and you actually sell it. It's your job now to do the commercialization. Well, first to do the clinical trials and then eventually take it to commercialization so that when you actually start generating money, you get fee revenue. They had that happen with two drugs last year. Well, 2 years before during COVID. One of them was called bamlanivimab. The other one was called bebtelovimab. Both of them were antibodies specifically designed to help fight COVID. What's amazing is they were able to do the research and everything in 6 months. The other companies, Eli Lilly, did the clinical trials right away, and they found that it was efficacious, put it out into the market. They got a good amount of royalties, a good amount of money, and they went public at the height of the COVID boom because it was really smart on their part. It's very similar to PayPal, where they IPO'd at a time where everything was overvalued, right?
Was that the revenue that I saw them still kind of getting in 2022?
Yes. So they were
There
still
was some
getting
sort of like income that they were getting. It was like
yes.
miscellaneous. Okay.
Yeah, so that's their revenue that they got for the drugs that were in the market. Now remember, they're not doing any manufacturing. They're not doing anything. All it is just royalty revenue that's going to be coming in. COVID is over, so there's no really need for those drugs anymore. So you're not going to get that reoccurring revenue, but you've got a good amount of money that's in the bank right now. So now they've actually got cash on the side. They're utilizing the cash judiciously at very, very little burn rate. And they're working with all these pharmaceutical companies, major pharmaceutical companies, to discover new drugs. They have more and more drugs are starting to make their way into the clinical trials. But clinical trials, depending on the drug, take quite some time. You can't just say, "Oh yeah, here, Matt, take this drug and see what happens." No, it's over time. You have to prove that it's safe, not just 1 week, 2 weeks, a month, or 2 months. It's like over a long period of time. You have to make sure it's efficacious. Then you have to submit it to the FDA. The FDA is supposed to look at your data and, eventually reach out to experts. Then they'll do like a panel to figure out what it is. They look at the side effects profile, and then they make a decision whether or not this can be put into the wild, right, into the world, basically. So all that stuff, it takes time, it takes money, it takes energy, but it's not something that Accelera has to worry about. All they do is the discovery portion. So they have figured out how to do drug discovery very, very cheaply, right? So, and the technology that they use is something called microfluidics to do it. They own all the patents behind it. Um, and so right now, if you go through it, these are all their partners, which is really good, because if the technology wasn't proven, these guys would not be in partnering with them. So if you look at right here, they have 69 initiated drug discovery programs. So they just started on doing 69 of them. Partner initiated co-development programs. So this is something they're doing that's a little new. Maybe I'll explain it another time. What's more interesting is that no, go back up. You see that 9 molecules in clinic, right? Those are the drugs right now that are currently being tested for efficacy. If those get approved,
Mm.
that becomes a nice stream of income that Accelera gets forever. Well, not forever, until the patent on that drug expires, right? That is the key
So
to
I'm
this company.
confused then. So these have made it through phase 2, phase 3, or we're talking something
They're in
different that
different parts. They're in different parts of the clinical trials phases.
okay.
Yeah, if you scroll down, I think they'll probably describe it, like where they are in each program. Sometimes they do, sometimes they don't. They're not very
Mm,
specific about it, because it's something that you'd have to look at with what is that thing called, the actual like pharmaceutical companies that they have
yeah. I
partnered
mean,
with.
here's an idea of what you're kind of talking
Yeah.
about, but
Yep.
uh, it doesn't show what
So you
specifically.
can see here, like right there, the first one, like year 1, 2, and 3 is when the discovery starts, right? Phase 1, phase 2, phase 3 is the next phase, where you're going to have like clinical trials and stuff, and then you see commercial sales. That's where they actually make the money. So like I said, it's going to take quite some time before they get there. The one thing I'll say is there's been a shit ton of insider buying, which leads me to believe that they've got something coming. Yeah.
Hmm.
you know the benefit to us as shareholders is, when you normally invest in a pharmaceutical company, like a small pharmaceutical company that has like outsized returns where it could 50x, because that actually does happen. um you're in a very risky zone, because you're putting all your eggs in one basket, technically, right? When you're investing with Accelera, you're investing in the technology that they will have multiple partners, that eventually 1, 2, 3, or 4 will be successful, and that'll be like a nice long stream of revenue. So, as an example, think about it this way: I would say Accelera is like a sports agent, right? The sport agent is going to make money, but it means that that person has to get past the draft and end up going to like the Miami Heat or something, right? If
Right.
the if the guy that you developed in high school, you found him in high school, does not make it to the NFL or the NBA, you're wasting your time, right? But it's not a lot of time that you spent with the guy. It's just your process of discovering them. So that's where this kind of happens, right? So one of the things is, now they have partner initiated discovery. So basically, what they do is they'll share in some of the cost of development, you know, and it gives them an outsized position in royalty later. So, Chris, do you still have faith they can 10x today's price of? I think this company could 100x.
So it's a $2 billion company, if I remember correctly, right
$1
now.
billion, $1 billion
1 billion.
company.
So my thought process is, so we were talking, and I always kind of want to relate it back to mentally, right? There's obviously the hype around all these things, right? But
Mm-hmm.
do you see, because they have so much cash and they've had successful drugs in the past, that there's a lot less risks associated with this, because they have
Yep.
that ability to have, say, a burn rate, which I think they're burning very little money, right? I think they probably
Yeah,
have.
because a combination of the cash on hand plus they're still getting research fees. Like every time that they research for a company, they're still getting paid for it. It's not like they're doing it for free, right? And then
Right.
on top of it, they have milestone payments. So if the drug makes it to a certain phase in the drug discovery portion, they get a milestone payment. So what it is it floats their operations. So they're burning very little money to basically do all the stuff that they're doing. It's just a matter of time to see when these drugs actually start to make it into commercialization mode. Because when that does happen, where a drug gets commercialized, that means that now these guys have another, like, it's almost like a nice stream of revenue coming in for the next 10, 15, 20 years, right? It just depends on the pipeline right now, how many drugs they have in the pipe, so
Yeah. So as you said, 9
yeah.
drugs in the pipe, 823 million on hand
Mm-hmm.
and market, 220 million of non-dilutive funding, which is pretty dope.
Yep.
Okay, that's interesting. I'm curious
Yep.
about their burn though, so I need to do a little bit more love.
Yeah.
But this kind of goes back to what you were talking about, though, is like their pipeline is only continuing to build in terms
Yep.
of what could be successful. And
Mm-hmm.
oh, here's a good idea as to the 9
Yeah.
molecules that you were talking
And there
about.
they are, in which phase of study they're in.
Yeah,
You
that's
know.
cool.
So bamlanimab. So go back to that one and scroll in a little bit.
Uh,
There you go.
I
So the
like that
first
name.
two, the first one, bamlanimab and bebtelovimab, both were successful antibodies for COVID. They were both utilized, but now there's no demand for it, so they've been sunsetted, right? So there's no additional revenue. The rest of these are drugs that are in different phases of clinical trials. So, you know, and then right here, you can see their revenue breakdown. They made 45 in last year. They got 45 million in royalties from bamlanimab and bebtelovimab, which were still out there, and they got another portion of it in research fees. This quarter, they got 10 million. $10 million for what is that thing called
Research.
for the research fees, right?
Well,
But they
I'm
haven't
glad you
got
really
the other
broke this
portions
down
yet.
because I saw this last year and I was like, royalties, and then the royalties went to zero. I was like, the hell is up with that? So to
Yeah,
kind of
if 50 Cent is your client and the guy's not making any more music and
yeah,
there's no radio station playing his music, then yeah, then you're not gonna get any royalties,
yeah.
But
So I'm glad
if
you
it's
I'm
a
glad you
yeah,
explained
yeah,
it because I was at first I was just like
yeah,
it took me off by surprise. I was just like, well, that's kind of bullshit, right? I mean,
yeah,
that's not fun. Nobody wants to have no royalties now, but now I'm kind
yeah.
of curious what their cash burn looks like.
Hmm.
24 million a quarter. So that's not
Yep.
I guess that's for the first half of the year. So this is all marketing and
Yeah,
buying stuff.
they went from $915 million to $824 million in like 6 months, you know. So think about it, that's what, like about 100 million,
Hmm.
right?
Yeah. Curious. Do you know how far back these go? I might
What do
do
you
some
mean?
deep diving. I guess I have 2020. So what I might do is I might do some research before the night
Yeah.
ends. And
Just keep scrolling down. Keep scrolling down. Let's see.
yeah, I don't want to. Oh,
Yeah.
that's it.
The other thing to look at, dude, go to Epsilon's main website.
I'm not sharing that, am I?
No.
Let me just share my screen.
Would you worry about stock dilution in the future? No. No. I wouldn't worry about that. Just escape and go to Epsilon. Yeah, there you go. Now go
Investor
to
relations or their website.
uh we'll go to their main website.
Whoops.
Okay. Go to the second one of whichever one. And go down. There should be one for careers because I want to show you like all the people that work for them. Like literally, it's the who's who of scroll up actually, all the way up. No, keep going up. Or
Uh,
you know what? Go back and type in investor relations. Right there, Upseller Investor Relations. or team right there. You see right underneath investor relation team. Click on that and go to meet the team, bro. Go through all of these things, and you're gonna see nothing but MBAs, PhDs, MSCs that are
This
like
guy.
experienced from everywhere. Yeah, he's on the board. Keep scrolling down.
Whoops.
Actually,
I don't know
he
why I
just
did
went back.
that. Double click that.
Literally, it's just scientist after scientist after scientist. If you
This
keep
guy looks
scrolling
like
down,
he knows what he's doing. I don't know why. Guy
but
looks
look at
familiar.
it: PhDs, PhD, a ton of PhDs and scientists that are lined up behind this and doing all the research for it. So,
Okay.
computer scientists, like drug discovery scientists, really interesting batch of uh, people that they have. You can put in cell biology. If you go to the left, you can click on each team,
Oh
like
shit.
what they have. You know, PhD. Do you know how much a PhD costs?
It's not cheap. I know that.
Yeah, and you can hit show all, and you'll see. Like it's a lot, man. It's a lot.
Interesting. Well,
Yeah,
I'm
there's
definitely
some
gonna be
information
looking
that
at.
there's some information that I'll share with you outside of our main conversation right here because I think it's very interesting, but I don't want to put it out into the world. Um,
You don't want
so
people
well,
giving you crap
no,
if
I've got some. No, I've got some
it's wrong.
personal connections, not to that company specifically, but to someone who's keyed me into some details about it. So yeah,
Chris is Peter Thiel.
I am Peter too. No, yeah, this was
Brown
fun.
Peter Thiel.
This
Cool.
was
All right,
fun.
man. Well, I appreciate it. I know we dove deep into a few other topics there, but as always, a good time.
Yeah, thanks, man.
Next, and
Um,
you're going to be
I would just
buying
say to
Rocket Lab
anyone,
tomorrow, right? So
no,
yeah,
I
that's
would
good.
just say to anyone on here, if you are interested in buying Epsilon, do not let it become a big part of your position. This is still a highly speculative company that's going to take a really long time to see real revenues, which will help it boost up. So think of this as you get a chance to invest in a really long-term call option in a company that has a lot of potential, so that's it.
Cool. Thanks, my guy.
Yep.
Much appreciated. Till tomorrow. Let me know if you have any thoughts about what you want to talk about tomorrow.
Sure. Sounds
Cool.
good. Talk to you
Cheers,
later.
guys. Bye.
Bye.